very warm welcome to you as you join us on today's episode of Tax Matters. My name is Pearl Namaka, and with me is
Chiamaka Ohauchi.
Last episode, we shared with you what transpired at the CITN seminar held to x-ray the 2019 appropriation bill of the federal government as presented to the National Assembly. Because of time constraints, we could not conclude the offering, and we did promise that it will come to you today. And that is where we begin our offering today on Tax Matters, because we believe that getting the budget right is good for all of us.
At the point where we broke off last episode, Mr. Aziz Alatoye was discussing the paper presented by Dr. Biodun Adedipe. Topic was Budget 2019, Evaluating Social Safety Net for Poverty Alleviation.
The first thing he mentioned that attracts my attention is that he's a strategist. And I will come by way of questions, materially, for all the discussions I want to do. As a strategist, the first question on 2019 budget is that at what points of performance are we really on this budget and where are we going? And let me explain that. I remember we used to have a Vision 2000, then we have Vision 2010. Now, Vision 2020. This is 2019. So, are we at a 9 all over 10 of this year we are going, or we are at the middle of nowhere? Because we must have where we are going. Referring to the last example we gave about China, from what I read, on the papers, China has a strategy of bringing all its own poor people from poverty to prosperity. And it did 700 million people over a period of 30 years. That's what it did. That's what China did, and what placed China ahead of the whole world. So this budget, where are we? Is it year one of moving people from poverty to prosperity, or year 9? Or year 0?
Mr. Alatoye went ahead to make suggestions on the way forward.
As a matter of strategy, number one is that we must know our numbers in this country by way of population census. I don't think it's right just to be guessing. I know we cannot have correct number at any point in time, but we must be able to measure the number of people we want to bring from poverty to prosperity. And therefore, our budget must be strategic. I want to talk about the revenue growth. If I may ask us, which product is number one product in Nigeria? Oil. Now, the oil is number one whether we like it or not. And what we need to get out of oil is the oil itself. By investing the oil money to get out of oil. I want the Institute to recommend to the government, if possible, that the law that is going to stimulate the economy is the petroleum industry bills, the petroleum industry governance bill, and the petroleum industry bill. And I'm aware that the Institute has done a lot of work and recommendations to the government. This budget is not going to be meaningful unless we look at the petroleum industry bill. Because we are talking about billions that needs to be invested. And I'm happy Dr. Abiodun mentioned the need for the investors, to have a conducive business environment. The reform started in year 2000, and this is 19 years now. We have not, in fact, as at that year, 19 years ago, Ghana did not have oil. Ghana found oil, they did their legislation, and they have revised the legislation. And yet we are still struggling with legislation. As at the time the petroleum industry bill started, I think Nigeria was having almost 276 rigs here and there, dropped back to about 76. The production for Nigeria is supposed to be 2.5 million barrels per day. This budget, I think, based on the budget speech, which our president also confirmed, is 2.3 million barrels per day. Is that not what we have in the budget? How much was our production as at yesterday? It's 1.79 million barrels per day. It's not 2.3. If you don't pass the bill, how will the investors invest in the oil sector? And for every year, it is estimated that the oil and gas industry for the next 10 years will need about 20 billion US dollars to invest in the Nigerian oil and gas sector. For us to win the crude, sell the crude, convert it to the revenue, to be able to meet the government budgets. But yet the law is not passed. So it is my strong recommendation that the Institute write the presidency that whatever it will take, that petroleum industry bill should be passed. The fourth point which I want to raise is that to fund the government expenditure, materially, the revenue of the government should be coming from the people. I prefer taxation funding the government expenditure rather than the oil. And for taxation to be funding the government expenditure, I think we should adopt a strategic approach to taxation management as well. Because every year that we are having budget, probably not every year, but at least 2 years, we should have taxation laws being revised through the annual budgets. This is what is being done in the advanced environment in the UK. And we have done it in this country.
In 2018, a total of 5.320 trillion naira was collected as taxes by the Federal Inland Revenue Service (FIRS). This is the highest ever collected as federal taxes in Nigeria. Taxes have become an important source of revenue, enabling the government to provide greater infrastructural developments in our country. Tax revenues enable government to provide more roads, more railways, more bridges, more housing, more schools, more students in schools, more hospitals, more security, and generate more power. Because Nigeria deserves more. Only your taxes can make all our dreams come true. This message is from the Federal Inland Revenue Service, FIRS. It pays to pay your tax.
The program is Tax Matters, and we are taking a deep look at the 2019 Appropriation Bill of the federal government that is presently before the National Assembly through the prism of the seminar organized by the CITN on the 24th of January 2019. The last paper at the seminar was presented by Mr. Femi Awoyemi.
With the GDP of Nigeria, what kind of budget should you be talking about? You should be ambitious. Your budget tells you about ambition. So you should be looking at something like about, say, 20 trillion. That's when you begin to save yourself a serious. Because when you look at the 20 trillion, you ask where will the money come from? You just got it right. The first money comes from getting your PIB sorted out. Because you immediately release 5 trillion from inside that place already. That's taking care of itself. I mean, you have a budget of 8 trillion. We're already taking 5 trillion out already now. So where are we looking for the other money? Simple. If we really practice what we are saying in terms of TSA and slowing down, we already put money back again. If we get to do, for those of you in this profession, you stop doing, the profession stop doing tax collection and actually moves towards tax administration, we are in a better position.
Mr. Awoyemi's paper was in turn discussed by Mr. Yomi Olubenro.
How realistic the budget is. So, first of all, when Mr. President presented the budget, like expected, he mentioned that the budget was meant to further, entrench the effort the government is making and implementing the economic recovery and growth plan. The ERGP stands on a number of fundamental assumptions, or tripod, if you like. We wanted to restore growth. We want the development of the growth to become a lot more inclusive. That's what the ERGP says. And then the third one is around building a globally competitive economy. by investing in critical infrastructure. Now, look at that expectation and the policy trust, and look at the budget. If you want to grow the economy and you want to invest in critical infrastructure, and that's what you really want to deliver, you can't be budgeting the amount you budgeted for capital expenditure in that budget. It's just not going to work. That budget is not going to deliver the growth that we're looking for. We narrowly escape recession, but the economy is still fledgling. The economy is still very weak. Any little misstep in continuing the trajectory of investing a lot more and making sure that the economy remains reflated, we may just slip back. And that recovery is built fundamentally on oil price recovery. If anything happens as it may, there's a lot of worry. So if you look at the policy trust and what we budgeted, you realize that there's a little bit of disconnect. But there's even a lot more reason to worry. And that for me is probably the trust of what I pick away from what it's saying and the budget. We may end up having this 2019 budget as presented and ended up just effectively servicing our debt and paying our recurrent expenditure and having nothing left or no time to do anything on infrastructure.
Mr. Lubenro gave reasons for his worry.
The total revenue that is budgeted, if all assumptions are right, oil revenue target met, non-oil revenue target met, 100%, is 6.97 trillion. If you look at how much we budgeted to spend on servicing debt, including sinking fund, how much we budgeted for the current expenditure, and how much we budgeted for statutory transfer, it totaled 6.8 trillion. Our revenue, 6.97. Take away capital expenditure, everything recurrent, service debt, pay salary, pay overhead, transfer to statutory bodies like INEC, like National Assembly, like the judiciary, is 6.8 trillion approximately. So the total of the income will go to everything but capital. That is why the total capital vote, the total capital expenditure is exactly the total borrowing. 2.03 or 2 trillion is the capital expenditure. Borrowing is about 2 trillion, 1.95 or 1.85 or thereabouts. So, if you judge by, that's concern number one, judge by the trajectory of budget approval cycle over the last 2-3 years. And maybe probably just look at the last year. That budget got passed midway into half of the year, so maybe about just before we ended June. Now, that was pre-election year. The stakes are higher this year. It's an election year. Irrespective of how this thing goes, there's a likelihood. I do not see anything to convince me that we are likely going to approve that budget anytime faster than we did last year. Meaning, it will be after transition. Or there's a greater likelihood, maybe because of the new, the National Assembly will need to end their term before they pass on to, is it the Ninth Assembly or which one? All right, so because of that, they may hurriedly, try to put this in. And you know that recurrent can't stay. I mean, you can't wait until the budget is passed. You continue to service your debt, you continue to pay your salaries and all of that. That is why we end up achieving 100%, in some cases, over 100% of recurrent, because you will continue to spend whether budget is approved or not. You will continue to service your debt whether the budget is approved or not. There are statutory provisions that enable the government to keep on spending up to certain time in the year before the budget is passed. So because you will never have to wait for budget to be passed to do your recurrent and to do your debt servicing, you will end up doing that full time. But your capital will essentially have to be delayed until the budget is passed. When the budget is passed, the president will need to go back to secure approval for loan. If you need to borrow, you need to go back. Now, to then present your borrowing plan, this is what we're looking at, especially if you want to go external loan. Now, the reality is that if you put that into context, and you then consider the impact of the procurement process when the budget is passed and the funding plan is approved, you then need to start doing procurement process. Sometimes between the time of disbursement and the time that the contractors mobilize to start doing the real actual work, sometimes it's years, if not, maybe in a few cases, several months if you've started a little early.
Then followed a robust question and answer session.
In the past, there used to be tax implications for every budget. There must be something, in a budget. This budget, I have read and read, I haven't seen anything about taxation. For example, I expect to see that the rate of companies' income tax is going to remain at 30% as it is. There's nothing on that. You just said you are expecting about 11.3% from companies' income tax. What are the indices you are basing it on? Nothing is said about that. Let's go to another tax, the value-added tax. On the value-added tax, the rate of value-added tax is 5%. It has always been 5% since inception in 1993. And we have been arguing whether it should move to 10% to align with all the West African sub-region and other countries, because we are just out of sync with the other countries. In the OECD, you have value-added tax rate that is as high as 30% in some countries. Now, I expect the budget to address that statement, that the value-added tax, whether it's still going to remain at 5%, whether it is going to 7.5% or 10%, there was nothing in respect of the rate of tax for value-added tax. The same thing with petroleum profit tax, there was nothing like that. So I expect in our recommendation that any time there is going to be budget, there should be a statement on the tax implications of the budget. You expect a lot of this money from tax revenue, but nothing has been said on tax implications.
We have property tax, inheritance tax, and some other tax that we are not really practicing in Nigeria. Can't the CITN, can't this institute suggest to government how such other tax types can be explored?
Someone asked whether I support increase in VAT. And my response here is that Professor Shomori has killed the matter. So why do you want to know my opinion whether I support or not? So it's a wider thing than just talking about VAT increase. There's a whole lot we can do about tax. What we have today in terms of content is not what we used to experience then. The budget in those days used to have two major components, and that is the fiscal policy, which is what we have today, spending, revenue generation and spending, but also commercial policy, which will always deal with tariffs. So you then will be able to relate both of them and now take monetary policy from central bank to define what the policy of the government is for that very year. And whether indeed there is a direction to it, whether indeed it will deliver the aspirations of Nigerians. But what we have today is only one leg of what is supposed to be a two-legged budget. So we deal only with fiscal operations. That's what we see today. So there's no reference to commercial policy. And that relates to the issue of, tariffs and related items.
For those that may have the same concern that IPP, Teju Tax shared, that if you look at the budget speech, you're not going to actually get the flesh, the substance of what the tax direction and all of that. I recommend for you that you lay your hand, if you're interested in those flesh, those details of what is driving some of the numbers, lay your hand on the medium-term expenditure framework and the fiscal strategy paper. So it's a 3-year rolling plan. It actually contains details of what the government expects. It's updated annually because it's a rolling document. So if you check the 2019-2021 document, you actually have a lot of details around what are we doing on tax, what is our expectation, what is the GDP, what percentage did we estimate to get the VAT number. So for those that are interested in details, that's where you can at least get some information in the absence of a separate finance bill or any of those details in the budget.
There you are. There seems to be consensus on certain things. 1. It's imperative that Nigeria gets her acts together regarding accurate population figures. Therefore, a credible population census is a must now. 2. The Petroleum Industry Governance Bill must be passed without delay. 3. The yearly appropriation bill must be accompanied by what the experts call a finance bill, which will contain regulations and updates on tax matters.
It is hoped that all stakeholders are listening. Of course, as we speak, the budget is before the National Assembly. So, Senate President, Honorable Speaker, the ball is in your courts.
In 2018, a total of 5.320 trillion naira was collected as taxes by the Federal Inland Revenue Service (FIRS). This is the highest ever collected as federal taxes in Nigeria. Taxes have become an important source of revenue, enabling the government to provide greater infrastructural developments in our country. Tax revenues enable government to provide more roads, more railways, more bridges, more housing, more schools, more students in schools, more hospitals, more security, and generate more power. Because Nigeria deserves more. Only your taxes can make all our dreams come true. This message is from the Federal Inland Revenue Service, FIRS. It pays to pay your tax.
We're coasting home, and we're doing that in a celebrative mood. Yes, they say the reward for hard work is more work, but then it also helps to be commended for jobs well done. On Thursday, 31st January 2019, Mr. Babatunde Fowler, Executive Chairman FIRS, was presented with the 2018 Business Day Excellence in Public Service Award.
The third award tonight goes to Mr. William Babatunde Fowler. Mr. Fowler is the Executive Chairman, Federal Inland Revenue Service, FIRS. Under his exceptional leadership, FIRS management upscaled his performance in the management and execution of the mandate of the service. He has also ensured that there is greater ease in the tax payment process for all stakeholders. There is now transparency in the tax collection and remittance of the same to the Treasury single account. In 2018, the service performed the feat of realizing a whopping 5.32 trillion, the highest in the history of the service. Because of the work that they are doing and the recognition that this is not a one-man job, they came as a group to receive this award. Please give them a round of applause. We appreciate the work that FIRS is doing.
The award was received on behalf of Mr. Fowler by the Director Efficiency at the FIRS, Mr. Faramade Ogunsanya.
This award is presented to you on behalf of Business Day newspapers for displaying excellence in public service as recognized by this august body. Congratulations. A round of applause from the delegation from FIRS. They are truly doing a wonderful job. Government cannot survive without resources. So we need our taxation to expand in order for government to be able to meet the needs of the people. So they are the ones helping to fulfill that mandate. So we thank you for that wonderful public service. Thank you all.
We are proud to be associated with the FIRS, and we say big congratulations to the Executive Chairman, Mr. Babatunde Fowler, and his team of dedicated officials at all levels. More grease to your elbows. It is on that note that we draw the curtains on this episode of the program.
See you next week.